Hello everyone, myself CA Maulikanda. Now we have second session about discussing how GST and income tax relate to each other when it comes to fake billing, which will lead by Mr. Tushar Hemani ji, and it is my privilege to introduce him. Welcome sir. Please, CA Vaibhav Shah and Management Committee member CA Nirga Agrawal to escort the dais. Welcome, sir, once again. He is a proprietor of Lexperts Advocates. He studied BCom, LLB, and he is also a chartered accountant. Presently working as a senior advocate, and his expertise into argued complex matters relating to direct and indirect taxation, corporate, commercial, and fiscal laws before Honorable Supreme Court, High Court, tribunals, commissions, and various appellate authorities. Additionally, his remarkable achievements are one of the youngest at bar to have been conferred senior designation by the Gujarat High Court in 2019. He was a president of Income Tax Appellate Tribunal, Bar Association Ahmedabad for the term 2015-2017. He is a regular speaker at various conferences, seminars and meetings of various professional bodies on diverse issues in the field of taxation and corporate laws. He is also regular writer of columns, articles and papers for professional journals and conferences. Now I would like to invite Managing Committee member CA Nirav Agrawal along with CA Vaibhav Shah to felicitate Senior Advocate Tushar Hemani ji. Please round of a big applause. Sir, now dice is yours.
We are running late by 45 minutes. I was to finish by 1 o'clock. Probably I'll exceed by 15 minutes. But I'll promise that I'll not come in your way to a probably a sumptuous lunch. Can we have the slide, please? Friends, issue is one of interplay between bogus billing and the GST. Bogus billing is not something which is new. However, because of the information technology and development of the basic infrastructure, now sharing of information is happening on a real-time basis, almost simultaneously. In fact, yesterday only I was reading in the newspaper that the GST department is going to pick up the turnover figures from income tax department and they are going to reconcile both those figures. So with a development in technology, with a development in the way in which the data is gathered, it's called data mining, and the way in which artificial intelligence is developing, there is a sharing of information constantly between various departments, not only between GST department and the income tax department, also between various other departments. And therefore, the stand which is taken under one act will have material bearing for the purpose of another application of another act. So during good old days, the issues were not connected, and therefore the entire jurisprudence that you see on the bogus billing or the fake billing under the Income Tax Act, and few of the cases, because GST nothing much is happening, few of the cases where the aspect has been considered by the GST authorities, you will find that they are not directly answering the problems that we are facing on a day-to-day basis. So what we try to do is, we try to analyze the situation firstly under the Income Tax Act. We try to analyze as to what are the pros and cons of taking a particular stand and how the controversy arises. We then go to GST. Probably there we'll try to hurry up a bit, because my predecessor speaker probably has spent some time on explaining various aspects of 73, 74, etc. And then we'll discuss couple of issues where both these things are put together. What would be the consequences, and what are the stands, what are the defenses which are available for the purpose of taking a particular stand. These friends, let us look at what is bogus billing under the Income Tax Act. When we say bogus billing, fake billing, bogus purchases, non-genuine purchases, these are all the terms which we loosely use. Under the law, there are different types of situations, and different types of situations, they demand for different solutions. So the first item is accommodation billing. What is accommodation billing? This is the most prevalent, most common form of entering into, I would call it a questionable transaction or a tainted transaction. Accommodation bill is one where I am purchasing from X, I am getting the bills from Y, because Y is issuing me the accommodation bills so that I can create the proper accommodation in my books of accounts. They are popularly known as accommodation bills. So I purchase the material in black from the grey market. Because I have paid cash and I have purchased the material outside my regular books of accounts, there are no corresponding entries in the books of accounts. At the end of the day, if I want to regularize my books of accounts, because that material is either sold by me officially or used by me in the manufacturing process, or I'm a builder, etc., then consumed by me for the purpose of erecting something. In order to level my books of accounts, I take the bills from somebody else who is not the person who has supplied me the material or services. So therefore, they are known as accommodation bills. Accommodation bills, they are not 100% fake transactions. One leg of the transaction is genuine. However, it is settled in a manner which I would say not legal. Then comes the second part, that is known as bogus billing. Bogus billing is 100% bogus. That is, except for buying the bills from the market, there is no other thing which is happening. So supposing in a given year I find that I have abnormal high profit, what I try to do is I try to reduce that profit by booking certain bogus purchase expenses. For that purpose, I purchase the bills from the market by paying 2 or 3% commission in the grey market. So there, admittedly, there is no economic rationale. There is no movement of goods or rendering of any services. They are pure and simple bogus bills. And then comes the third category of items, where when I enter into the transaction, I do not know that those transactions are going to become a questionable transaction. So today, I want to purchase, let's say, steel for the purpose of constructing a building. I do not know any steel vendor, or there are different varieties of steel which I want for the purpose of construction. I get in touch with a broker who is a regular person. I tell him that, sir, I want XYZ quantity of a particular grade of steel for the purpose of erection of a building. He would supply me the material. He would say that, sir, maal pahunchi jashe. You receive the material, you also receive the bill from that agent. You make payment according to the bill which is raised upon you. 2-3 years down the road, you find one fine day that you have received a notice from one of those agencies, either income tax authorities or GST authorities, questioning the transactions. You go and ask the broker, he would say that, sir, that party is now not traceable, or I did not know that that party is non-genuine party, bogus party, and or a party who has disappeared. So those are the third category of the transactions, where the person who is the end consumer, who is the end purchaser, when he enters into the transaction, he does not know that these are the transactions which are non-genuine, or these are the transactions which could not be proved in future. And therefore, without knowing, he might be stepping onto a landmine. So these are the third category of the transactions. And nowadays I come across large number of these categories of cases, that when the person enters into the transaction, he generally does not know. And genuinely, he would either deal through a third party, or even if he is dealing with somebody, supposing a regular supplier of mine, I tell him that, sir, send me 100 kilograms of cements. He would send me the cement Boris and ultimately give me a bill which is of a third party. I ask him, sir, bill koi bijanu che? To go, all right, ena through route karelu che. I'll innocently pay that party without even realizing that those bills are bogus bills. So that is the third category. And there the problem might arise because of the situations which I have narrated over here, that supplier 2018 transaction, 2023 supplier is not traceable, and therefore there is no confirmation coming from the supplier. Supplier never existed. The inspector goes to the site and finds out that the address which is given in the bill, that address, the supplier does not exist. That supplier is not at all found. And then when the inspector inquires around, he tries to find out, comes to know that there was never such a shop or establishment or the person who is mentioned in the invoice. Then supplier is alleged to be bogus. There are allegations by the department that this supplier is bogus. Either there is some inquiry which is going on against the so-called alleged supplier, who is termed as a bogus supplier, because there are large number of reasons. Some of them will go slightly later on from now. Then supplier is proved to be bogus. Supplier files an affidavit, supplier appears before the authority, confesses having carried out a billing business, and therefore he is proved to be a bogus supplier. And the last category is, my immediate supplier may be genuine. However, my immediate suppliers, there are series of suppliers, because I purchase from A might be purchasing from B might be purchasing from C. Now that C happens to be somebody who has either violated some law in some manner, and he is caught, he has either confessed, he has disappeared, or he never existed. And based on that, the authorities would reach to a conclusion that because your supplier is bogus, therefore your second degree supplier is bogus, first degree, and therefore your purchases are not genuine. And therefore, these are the purchases which we believe to be non-genuine. So, what are the basic documents which are required for the purpose of establishing genuineness of the purchase? Because these are very important. In fact, some of the documents are common documents. When we go to GST, we'll also once again discuss these documents, but these are broadly the documents. These are either or, not that you need all of them, but maximum number of documents if you can get hold of, then probably you can establish. And then when we'll go to the judgments part, we will see that courts have taken a view that if you have reasonably discharged your burden of establishing the purchases, then probably you can take a defense that my purchases are genuine. So what are the documents? Purchase order, invoice with IRN, if at all you cross that threshold, e-way bill, transport receipt, affidavit of the driver, weighbridge slip, toll payment receipts, RFID vehicle tracking details, GPS details, then the various forms under the GST, correspondence, if at all, any which has happened with the supplier, you can file those correspondences, including emails, WhatsApp chat, messages. You must preserve those things. Payment details. You must have made the payment through the proper banking channel, and you preserve those details also. And then internal documents like inward register, or you have some on-site material receipt format, etc. Then you preserve those records also. CCTV footage, if you have installed CCTV at your factory premises, at your business premises, at your godowns, then probably you should also preserve those footages where the truck carrying the material is entering your premises, because the truck number, etc. is mentioned on the e-way bill. And then you can establish that that truck has actually, as a matter of fact, entered your factory premises or your godown. If you have paid rents, etc. for the purpose of renting a godown, storing the material, preserve those documentary evidences also. Because if you, genuineness of the transactions can be proved in many ways. And some of the ways are preservation of all these documentary evidences, so as to establish that as a matter of fact you have actually entered into the transaction. Because the allegation, the broad allegation against you is that without actual physical movement of the goods in question, you have only entered into a billing transaction. In order to rebut that presumption which is against you, you need all these documentary evidences. Then comes, what if you have maintained a minute day-to-day quantitative detail? If you are a trading concern, you purchase 100 kilogram from party A, simultaneously those 100 kilograms are sold to party B. Likewise, you have meticulously maintained the opening stock, purchases, sales, closing stock. All these figures are meticulously maintained by you. They are, if at all, tax audited. They are otherwise also supplied to banks, etc. for the purpose of obtaining finance. All these records, if you can establish that the quantity details are maintained and those quantity details are not disturbed by the assessing officer, then under the Income Tax Act, Delhi Tribunal has taken a view that no disallowance is called for, because then you have actually purchased the material and there is no question of then taking a view that you have not purchased the material. In this case, the party in question maintained the stock register and the profit and loss account along with the quantity details and the tax audit report. Based on that, tribunal said that no disallowance is called for. What if quantity details are not maintained? The next question is, and there my personal view is that if the quantity details are not maintained, if there is no one-to-one matching, then probably you have a larger issue on hand, because then establishing that you have actually purchased the goods is going to be extremely difficult. So advice is to maintain the quantity details if you are dealing in sensible products. There are few products where we believe that the maximum incidents of fake billings are taking place. Steel, cement, scrap, edible oil, all these are items where maximum amount of disappearance of those suppliers, they are taking place. And therefore, if you are into any of this, I would call them hot products, then you must maintain the quantity details. That would take me to the next burden of proof. How can you discharge the burden of proof? We have already seen the amount of documents that one is required to maintain. In that view, kindly have a look at these two judgments. The first judgment is that of the Supreme Court. It's a civil appeal, dismissal of a civil appeal, and therefore it carries lot of weight. It has a binding effect under Article 141 of the Constitution. And therefore, what is it that is held by the Supreme Court? Supreme Court said that purchase bills, transportation bills, confirmed copy of the accounts, VAT registration of the sellers, as well as income tax returns and payment was made through check. So broadly, if you have these details, and these details are the only details which I have elaborated in my earlier slide. So if you have these basic details, then probably you can raise a claim that you cannot disallow my purchases insofar as income tax is concerned. And we have a direct judgment of the Supreme Court, wherein there is a speaking observation of the Supreme Court that these are the documentary evidences which are sufficient so as to establish the genuineness of the purchases. Then we have the judgment of Mumbai Tribunal. It is not Supreme Court, I'm sorry. It is a Mumbai Tribunal, 412 ITR 152, the second part of the bullet, wherein the case was one of a builder availed certain services, two kinds of services. One was for the purpose of taking the architectural services. Second was supply of certain material on a turnkey basis, on a contract basis, railing, etc. TDS was deducted while making payment to those 13 parties. Before the assessing officer, none of those parties appeared. Before CIT appeals, in a remand proceedings, 8 parties out of 13 appeared before CIT appeal. CIT appeal ultimately took the view that yes, if those parties appeared, and what is most important is TDS was effected, tax was deducted at source, and in that process, the PAN of the person who has supplied those material and or services was captured by the income tax department. And if TDS is effected, payment is made through banking channel, and if 8 parties out of 13 appeared before the authorities, then you can't make any disallowance out of that service components also. So in case of a service, because the proof, the degree of proof is slightly different. When it comes to material, you have to establish the physical movement of the material. There could be some evidences which are available so as to establish the physical movement of material, because material is tangible, whereas services are intangible. Once the services are rendered, then there is hardly any proof of service having been rendered, and therefore, in that view of the matter, TDS is one important proof which one can preserve for the purpose of establishing the purchases. Then comes the next judgment, that what is the role of natural justice. Supposing a buyer has purchased some material from a supplier. Supplier at a later stage, allegedly either by way of filing an affidavit or by giving a statement before the authorities, has confessed that I have entered into some bogus transactions and I have supplied bills. I have not supplied any material and or provided any services. Now, what is the role of natural justice insofar as these aspects are concerned? In the first judgment, it's that of a Supreme Court. The case was investigation wing of the income tax department. They got hold of certain suppliers who confessed that yes, we have entered into bogus billing transactions. Now that information was supplied by the investigation wing to the concerned assessing officer for the purpose of taking appropriate action. Now that concerned assessing officer, without making any further inquiry, only based on that investigation report, raised a show cause notice against the concerned SSC that, sir, based on this investigation report, I want to make disallowance out of your purchases. SSC said that, sir, firstly, this is borrowed satisfaction. You can't bodily lift the investigation report. It is your job to carry out investigation independent. And secondly, if at all you are relying on an affidavit or a statement of a third party which is used against me, then might as well make that person available so that I can cross-examine him. I can get the necessary facts extracted out of him during the process of cross-examination. On both these counts, the assessing authority failed, and in that context, ultimately Bombay High Court held in favor. Supreme Court confirmed that SLP, dismissed the departmental SLP, and confirmed the judgment of the Mumbai High Court on the ground that without cross-inquiry, without independent inquiry, without affording an opportunity to the SSC to cross-verify the evidences which are used against it, there is no question of making any disallowance. The second aspect was Maharashtra Sales Tax Department. We can put GST department as against Maharashtra Sales Tax Department. We can put GST department here, and then try to see that no addition can be made merely on the basis of material information received from GST department without providing such material to SSC or affording an opportunity to cross-examine the concerned parties. So there is a GST finding, GST raid. We'll go there little later, but there is a GST action. And during that GST action, certain incriminating material is found out as regards either carrying out of some bogus transactions or alleged statement of that person who has given that statement. Now, can that alone be used for the purpose of making an addition without carrying any independent investigation under the Income Tax Act? Look, that could be the starting point. That could be an indicator to the assessing officer that, sir, this SSC has certain transactions with a tainted party who is held to be so tainted under the GST laws. However, the conclusion of the GST department cannot be bodily lifted and for all times to come be held that because that party is treated as a bogus party under GST laws, we will treat that as a bogus party under income tax laws without carrying out any further investigation, and straightway we will make a disallowance of your purchases which are flowing from that party. Both the departments are independent. Both the departments have a different role to play. In fact, both the taxation system are also wrong. Income tax is on the income, whereas GST is on the supplies. Nothing to do with the income component embedded into the supply of goods or services. And therefore, courts have held that you can't bodily lift those investigations without applying your mind, without carrying out any independent investigation, straightway reach to the conclusion. Then comes that what if my sales is accepted? What if the corresponding sales purchases are held to be bogus? Let us take a situation that purchases are held to be bogus. However, there are corresponding sales out of the very same bogus purchases. Without disturbing the sales, department now wants to allege that, sir, your entire purchases are bogus because you have purchased that material from a person who, according to us, has confessed during the GST investigation that he has not supplied the material, he has only supplied the bills. Therefore, without disturbing the sales, we will disallow the entire debit side and disallow the purchases which you have claimed. Bombay High Court was faced with identical situation. There also, sales tax department make an allegation against a party. High Court observed that, sir, if you are not doubting the sales, then how can you doubt the purchases? Because out of the very same purchases, I have made sales. And if sales are accepted, you are taxing me on the income which is generated by sales. You can't turn around and say that I'll disallow the purchases. And therefore, the Bombay High Court was of the view that once you accept the sales, once you do not disturb the sales, the purchases cannot be disallowed. However, two provisos. One is, in the facts of that case, there were purchases which were having one-to-one correlation with the sales. So in case if 100% purchases are disallowed, this ratio can apply. Or if you are a trader and if you can establish that I purchased ABC material, on the very same day I have sold ABC material to somebody, you can apply the ratio of this judgment. However, if there are large number of purchases and one-to-one correlation is not available, and only small part of those purchases are doubted, then probably you cannot use this judgment. Then we have the law on the issue as regards percentage disallowance. We have a judgment of Delhi High Court taking a view that under such circumstances, 100% of the purchases are required to be disallowed. 100% was on the ground that SSC all the while never took a plea that, sir, this was an accommodation purchase. SSC all the while said that I have made purchases only from A and not from anybody else. In that context, Delhi High Court said that A is now proved to be non-genuine. A is not in existence. SSC never pleaded that, sir, if not A, I might have purchased the material from the open market and then made the accommodation transaction. And in that context, High Court confirmed 100% disallowance. Oil cake, Gujarat High Court, 25%. Suraj Infrastructure is a case of builder where iron, the rods, etc. are used, 12.5%. Rakesh Jain, Gujarat High Court, 6% in case of valuable stones, diamonds, etc. Gujarat Ambuja, it is oil cakes, and there the disallowance is restricted to 5%. So we have a large canvas where from 100% to 5%, and in some cases, I'll be in a short while from now point out, no disallowance. So 100 to 0, we have that entire canvas in front of us, and we have to decide in which category we are falling so that the appropriate defenses can be raised. Look, by and large, the court is concerned with one simple logic, and that logic is, if your plea is that, sir, these are accommodation purchases, I purchased the material from grey market, I obtained bills from somebody else, and ultimately I am a genuine person who has either purchased the material or consumed the material. Then court would try to find out what is the amount of saving that you have generated by entering into this transaction. The amount of saving is admittedly because you buy from the grey market, you don't pay the indirect taxes, namely GST. Supposing GST rate is 18%. So you have saved 18%. Out of that, the calculation is that for the purpose of buying from the cash market, you would have incurred 3 to 4% of expenses. So 18 less 3 to 4%. Supposing you have disclosed GP of 10%. So 10% GP is already disclosed in this on this transaction. So GP 10% plus 4% expenses for the purpose of obtaining those bills. So 14%. Your saving is 4%. So court might take a view that we want to disallow 4% out of your purchases, because that is the saving that is happening in your case, and because income tax is on income, this is the amount of income that you have generated by entering into such transaction, we will confirm 4%. So that is how the percentages have been derived. Then the other approach is I just indicated that supposing I have already disclosed a comparable GP insofar as those tainted transactions are concerned. Supposing my last 3 years average GP is 10%. During the year, there are 3 transactions which are questionable in nature. On those 3 transactions, allegation is you have entered into a transaction where supplier is bogus. On those 3 transactions, I have shown a GP of 12%. As against average GP of 10%, I have shown 12% GP insofar as those alleged bogus transactions are concerned. My defense is that both the GPs are comparable and there is no question of any disallowance. Bombay High Court says that yes, that approach is a correct approach. So what you do is, you try to level the GPs between the 2 transactions, recorded transactions and so-called bogus transactions. And if the GP is comparable, then there is no question of making any further disallowance. You can accept that GP. Ahmedabad Tribunal has also accepted such an approach. Then there is a minor distinction between various items. First is distinction between traders, manufacturer and or consumers. Look, trader, one-to-one matching is permissible. Manufacturer, again, the problem is manufacturer, they consume the material for the purpose of manufacturing the end item. It is difficult to establish one-to-one correlation between those tainted purchases and the consumption by the manufacturer. Supposing a scrap manufacturer, if he is buying the scrap and manufacturing the billets, by melting the scrap, there is always a burning loss of 5, 10, 15%. Now, in that burning loss, if I am adjusting the so-called bogus purchases, then there is no one-to-one correlation. And therefore, different criteria would be placed for the purpose of pointing out or quantifying the disallowance. End consumer, I am a builder. I purchase steel, I use it for the construction. Therefore, I have to give the figures and facts for the purpose of justifying my claim that, sir, this is my structural engineer certificate. He says that for the purpose of constructing this kind of building, you need 100 tons of steel. Out of that, I have consumed 99 tons of steel. Therefore, I am consuming less. Then, therefore, where is the question of any bogus purchases? Because as per the law, as per the certificate, I have consumed 100 and I have only shown purchases of 99. However, if there are 105 purchases of 105 tons, then probably a person is justified. Is it mandatory to reject the books of accounts before any disallowance is made out of the purchases? The answer is, as per law, yes, it is mandatory. However, not in these many words that I invoke 145(3) and I I reject your books of accounts and I disallow a percentage of your purchases which you have claimed in your profit and loss account. Not in this many words. However, in substance, if the authority has given a finding that your books are not reliable, your books are not disclosing the true and correct picture of your profit, then even without actually invoking 145(3), authorities can disallow and purchases out of the total purchases that you have claimed. However, if you can demonstrate that there is not a word as regards the correctness or veracity of your books of accounts, and straightway purchases are disallowed, then probably you can raise that as a defense, that without rejection of books of accounts, you can't pick up an individual item of my profit and loss account. Look, ultimately, the books of accounts are profit and loss account. Each item of debit and credit, without rejecting, you can't disturb them. And that is the logic that you must reject the books of accounts. GP/NP comparison of last 3 years and industry average, if you can give that comparison, that is a valid defense. That supposing in the industry, GP rate is 5%, and as against that your average GP of last 3 years is 7%, then you can also plead that, sir, if my GP is more, you can't question my purchases because I have already shown more profit than my industry peers. Disallowance under section 69C. Many a times you find that purchases are disallowed under section 69C. Is it permissible? Answer is no. 69C is only vis-a-vis the purchases where I fail to give an explanation. Here I give an explanation that those purchases are paid out of my regular books of accounts, out of my bank account, because those purchases are admittedly recorded in the books as genuine purchases, and my payment etc. is through normal banking channel. Now, if the payment has come out of my normal banking channel, then there is the question of not explaining it, because that payment is out of my bank balance, and therefore there is no question of giving any explanation which is not an acceptable explanation. Therefore, 69C cannot have any application. Of course, under 37(1) purchases can be disallowed, but 69C technical defense is also available. Then comes two interesting issues. One is impact of 40A3. Gujarat High Court in the case of Ranip 290 ITR 702. It was a case where the SSC was found to be, SSC was a dealer in oil, edible oil. SSC maintained a parallel books of accounts wherein cash transactions were maintained. In that cash transactions, there were purchases and there was a sales. The case before the assessing officer was that, sir, you tax me only on the profit because there are purchases, there are sales. Assessing officer invoked provisions of 40A3. It says that because your purchases are in cash, I will disallow the entire purchases because everything is in cash. 40A3 is invoked and entire purchases are disallowed. Matter reached before the High Court on the ground that, sir, you can't tax me by disallowing my entire purchases when the very business is carried out in cash. When I enter into the transaction outside the books of accounts, all my sales, all my purchases are in cash, and therefore 40A3 has no application. High Court rejected that argument. High Court said that no, sir, you can't get any premium because you are carrying out the business in cash. In fact, you are violating one law by carrying out your entire business into cash. You can't plead or take that as a defense so as to deny the applicability of 40A3. High Court ultimately confirmed it, and therefore its implication now. Supposing in the case of a bogus accommodation purchase, my plea is that not from A, who has supplied me the bill, I have purchased the material from B. Revenue would say that, sir, purchase of material from B is entirely in cash. Because A has not supplied the material, you have made payment to A. Material has been given by B, you have not made any check payment to B, you have paid cash to B, and therefore will disallow entire payment to B and not allow anything in your hand. There are two arguments which are available. One argument is that, sir, where is the finding that I have violated 40A3? Because 40A3 presupposes that each individual transaction must be in excess of 10,000 rupees. In absence of there being any detail as regards my number of purchases, there is no question of invoking 40A3 unless you have those details which are available on a day-to-day basis. And the second is that, sir, in my books of accounts, I am not claiming any purchases from B. I don't even claim that purchase expenditure on account of purchases from B. I am all the while claiming purchases from A only. That payment is always by check. However, department wants to disallow some percentage of that purchase or 100% of that purchases by taking a plea that A has not supplied you the material. End of the day, what I am claiming is my payment to A only. I do not plead that I am allow me the purchase expenditure which I have spent on B. So what is effectively happening is that I give check, payment is always by check. Out of that money, A might be giving some money to B for the purpose of supply of the material. I am not paying anything to B. In my books, I have claimed only the check payment, and that is how one can answer Ranip. GP percentage or bogus purchase, I'll come back to this issue when we go to the GST part of it. NK proteins, revenue authorities nowadays they use this judgment for the purpose of propounding the theory that 100% of the purchases are required to be disallowed. I have discussed that that is not correct. Before the Gujarat High Court, there was a case where both SSCs and the revenue authorities were in appeal, and both the appeals were dismissed, and therefore only 25% is confirmed by Gujarat High Court and not 100%. So therefore, the use of NK Industries for the purpose of justifying 100% disallowances out of purchases is not correct. Gujarat High Court subsequently explained those judgments in 2019 and 2023 by deviating from NK, pointing out that NK also, it was a case of 25% disallowance. That will take me to the GST application as regards what is the position under the GST Act. Under the GST Act, we have a recent judgment of Supreme Court wherein the documents which are required for the purpose of justifying the physical movement of the goods have been prescribed by the Supreme Court. That name and address of the selling dealers, details of the vehicle, freight charges, acknowledgement of taking delivery, tax invoices, payment particulars, etc. and any other material which can justify the physical movements of the goods. This was a judgment which is 2023, and these are the documentary evidences which one is expected to maintain. All this, in fact, we have gone through this, all these documentary evidences when we discuss the income tax aspect. These are the documents which are required for the purpose of establishing the GST purchases. That would take me to the next slide. What is the scheme of GST? Look, as I discussed earlier, unlike income tax, where the authorities are concerned with the element of income embedded into the transaction, GST department is concerned with the supply of goods or services. The moment there is a supply, even if the transaction is in loss, GST is leviable and is levied. And therefore, the next question, that if it is a supply-based taxation system, then every time I supply, do I pay the tax? Then the system says that no, sir, you have to pay the tax every time there is a value addition. 100 rupee, you sell it for 110, you pay the taxes on 10 rupee. For the 100, you claim ITC, that is input tax credit, which you have availed along with the purchases. And therefore, the next question, that if the goods are already taxed or services are already taxed, I get a credit and I don't have to pay. To that extent, once again, in the next outward supply, I don't have to pay the taxes, I can use the credit. And therefore, mark this word, therefore, identity of the goods and supply, which has already suffered the tax, is material. Here, under the GST Act, the ITC goes with the specific goods or goes with the specific services. It is not general. It goes with only those goods which have suffered taxation. It only goes with those services which have suffered the taxation, and therefore, the identity of the goods is material. Unlike income tax, where I might purchase from anyone so long as I offered income from tax, difference between the purchase and sales, I get away. Here, in order to claim the ITC, I have to establish that my outward supplies is consisting of the same goods, same services which have suffered the taxes while they were inward supplied to me. And 16 very categorically says this, section 16 says that eligibility for the purpose of taking ITC only flows from invoices or debit note which are issued by the supplier of goods or services. Therefore, the whole accommodation purchase theory fails when it comes to ITC. ITC can come in my books only through the person who has supplied me the invoices. And therefore, only the person who has supplied me the invoice must supply the underlying goods or services to me so as to make me eligible to claim the ITC. There is one more draconian provision, and that is 16.2c. 16.2c says that I don't get ITC unless my supplier pays the underlying tax into the government treasury. So 100 rupee goods, 10 rupee tax. I write a check of 110 in favor of my supplier. I receive the goods worth 100. But when I go to the department to claim 10 rupee worth of credit, department will say that, sir, your supplier has not paid this 10 rupee into the government treasury. You will not get it. I would say that, sir, I have already paid 110. So I have already parted with my obligation. I have discharged that obligation of tax. How can you deny me now the credit? You go after the supplier and get hold of him, hang him, whatever you want to do with him. But how can you deny rupees 10 credit to me? However, 16(2)(c) is there in the book. So long as 16(2)(c) is there is no question of challenging this particular aspect. There are large number of constitutional validity challenge against 16(2)(c), including before Gujarat High Court, which are pending adjudication. Under the indirect tax laws, this is a well settled principle. Kindly appreciate, there are judgments of erstwhile Kingfisher Airline. Kingfisher Airline, when they paid salary to the pilots, they deducted tax at source. They never paid that money into the government treasury. When it comes to taxing the pilots, they claim this credit, saying that, sir, those monies have already been deducted by the my employer. And the department's argument was precisely the same, that, sir, they have not paid that money into government treasury, therefore we will not give you the credit. To that, Gujarat High Court has said that there is no question of denying the credit. In fact, under the law, if you deduct the tax and do not pay into the government treasury, there are provisions for prosecution. Penalty is not an answer. There is a straightway provision for prosecution once you deduct and do not pay into the government treasury. Same prosecution provisions are available even under the GST Act also. However, 16(2)(c) says that you can't get the credit, and therefore any of my supplier or that chain, my suppliers, immediate and earlier degrees of suppliers, wherever there is any default, wherever there is any problem, the ITC which is used for the purpose of discharging the obligations will have a cascading effect. At one stage it is denied, all the subsequent stages it will be denied, and a plea would be taken that you have violated 16(2)(c), therefore in your hands we will not allow you the credit, and therefore the consequences, namely you pay into the government treasury once again, even if you have paid the money in favor of your supplier. Section 155 says that if you want to claim ITC, you have to discharge the burden of establishing that you have such a claim. Again, these are the same situations, GST investigations, that supplier is not traceable, supplier has made a statement, supplier has confessed, all those probabilities I have narrated over there. And then the consequences, once it is established that my purchases are not genuine and the claim of ITC which is appearing in my books is not allowable, then what are the consequences? 73, 74, 70 summons, bank attachment, and arrest under 132, read with 69. 73, 74, probably my predecessor speaker has spent some time in explaining this, but let me very hurriedly point out the stages. 73, 74 is a process which is pre-adjudicatory process. So any instance, specific instance of a tax evasion by taking credit, etc., or entering into a transaction which is otherwise taxable, comes to the notice, then on a transaction to transaction basis, these proceedings can be initiated. It is not an assessment proceedings, it's a pre-assessment proceedings where the authorities would decide that my supplier has given a statement that he has entered into bogus billing transaction. In my hands, that supplier has supplied goods worth rupees 1 lakh along with ITC worth rupees 18,000. I have used that ITC of 18,000 while discharging my outward supply liability. Department says that now that 18,000 ITC is not available in your hand, therefore you have to pay that money back into the government treasury. They would put me to intimation. The first part is intimation, DRC 01A. Intimation would be issued to me. My predecessor friend has already pointed out that you should not file a detailed reply, etc. I am not on that part. He has already taken care of. My view is that once a communication, the intimation comes in your possession, you have two options. One is you accept the intimation, pay into the government treasury the amount of rupees 18,000 so as to avoid this. The second is you stick to your stand that my credits are genuine, my suppliers are genuine, therefore you do whatever you want to do. I stick to my stand, I ignore that intimation. The next stage is once the intimation is given, I pay, no issues, I do not pay, it gets culminated eventually into the show cause notice. Once it becomes a show cause notice, then again I have to answer. I file an answer, etc., and then ultimately an order is passed. It's only after passing of that order legitimately the demand would arise against me, and I am required to pay that money into the government treasury, along with, of course, whatever penalty, etc., which is there. Till the adjudicatory order is passed, there is no question of any recovery. There is a direct judgment of the Supreme Court which says that without recovery, without proper show cause notice and passing the adjudicatory order, there is no question of any recovery. It is an old judgment, 1987, under the excise law. I have cited 28 ELT 53, that you can't recover a single rupee without passing any adjudicatory order after issuing the show cause notice. So it is not an obligation. Kindly appreciate what I am trying to point out is that intimation or even issuance of show cause notice does not create any obligation to pay tax into the government treasury. It's only once the order is passed, you are obliged to pay into the government treasury. Then comes the next part, and this is very interesting part. Many a times I come across SSAs who would say that, sir, we want to pay into the government treasury. However, we want to keep the issue alive because we believe that we are innocent. However, we do not want to take chances of finding against us and discharging huge interest and other burdens at a later stage. Therefore, we want to discharge the tax liabilities right now. However, we want to keep the issue alive. Now, the experience is the moment you pay, they drop the proceedings and do not proceed any further. In that context, can I make a payment and do two things? One, write a letter to them that, sir, this payment was under protest, because now we don't, unlike old Excise Act 233B, Rule 233B was there, where I can make payment under protest. Under the new scheme of GST, there is no provision for making payment under protest. Then can I make a payment and write a letter independently that, sir, my payment was under protest, though it is paid under DRC 01, 03, whatever may be the stage. Supreme Court said that yes, you can do that. You can, when there is no prescribed method of making payment under protest, you can make a payment first and then write a letter, and letter would be treated as your protest. 41 ELT 358 in the case of India Cements, Supreme Court has categorically held this is pre-233B rule introduced in the excise mechanism. Prior to introduction of 233B, there was no mechanism whereby I can make payment under. Then comes the next aspect of the matter. Supposing I receive intimation today. Against the intimation itself, I want to make payment. 73 or 74 subclause 5 would give me that option that I want to make payment against the intimation. However, I want adjudicatory process also to continue. I do not want that process to stop so that I can file appeal. I can revive my claim at a later stage. I can claim refund of the money that I am forced to pay today. Madras High Court said that you can do that. The moment there is an intimation, you pay the money, but you do not write to the assessing officer, because 73(5) says two things. One, paying into the government treasury. Second, intimating the officer about your acceptance of guilt. You do not accept your guilt. You do not write to the authorities that, sir, I have done anything wrong. You merely pay the amount into the government treasury and do not say anything. In that view of the matter, the authorities are obliged to continue the investigation process, and that way you can keep the issue alive even after making the payment, so as to avoid unnecessary harassment by the department. Circular is very clear that in a series of transactions, if any of your earlier suppliers pay into the government treasury, you can't be called upon to pay the taxes. Once again, Circular 171 dated 6/7/22 categorically says that only once payment can be recovered in a chain of transaction. Instruction number 1 of 22 says that during the course of the flying squad's visit, supposing your supplier is found to be bogus, and based on that, the flying squad of GST visits your premise and insists for payment that, sir, whatever ITC that you have claimed, reverse it right now and pay equivalent amount into government treasury. Before that, we will not leave your premises. That is not permissible. Even Gujarat High Court in Bhumi Associates case has passed stricture against the authorities for doing this. Then comes the summons. Summons is one weapon available with the department which is used indiscriminately by the departmental authorities. As my predecessor speaker has already said that they ask GSTR 1, GSTR 3B, 2, etc. For the purpose of doing that, there is a instruction number 3 of 22 dated 17/8/22 where they say that no summon for collecting statutory records. There is a direct instructions of CBIC taking a view that you can't issue a notice for the purpose of calling GSTR 1 or GSTR 2A or 3B, whatever. Or you can't issue summons to the managing director, chief financial officers, chief technology officer. You can't do that. They are, unless there is a complicity, unless it can be established that they were directly involved into the transaction, you can't call them merely for the purpose of harassing the SSC and putting more pressure. Bank attachment, again, it's not a routine process. Supreme Court has very beautifully explained in the case of Radhakrishna that when commissioner records a satisfaction that in order to protect the interest of the revenue, I am attaching the bank account, that is not something which is subjective. That process is objective. There must be some tangible material indicating that there is a flight risk. There is a risk that the SSC might not pay the demand and run away. Only under those circumstances, bank attachment is justified, not in a routine manner that because we have raised the demand, let us attach the bank account so that we can recover something out of the SSC. That is something which is not possible. Arrest and bail, again, powers to be used sparingly. The instruction says that they are not to be used in a routine manner. It has to be used sparingly, namely only under exceptional circumstances, rarest of the rare case. There has to be the condition that for the purpose of proper investigation and prevent the possibility of tampering with evidences, intimidating or influencing the witness. If these conditions are satisfied, then only arrest. Again, we have an instruction of the CBIC. You can demand cross-examination of any of the person who are mentioned in the show cause issued to you under the GST proceedings also. And if your supplier's ITC is disallowed, then that demand cannot be raised against you. For that, there is a direct Delhi High Court judgment. Balaji is a direct judgment only on that your supplier, if he has committed some sins, and if there is no complicity, if there is no connection between you and that supplier who has committed illegalities, no demand of ITC can be raised against you. Now comes 3 issues which are important, that what is it that is required to be done. First, real life situation is that there is a IT search. There is a material which would indicate unaccounted turnover outside the books of accounts. IT department says that you disclose this turnover, otherwise we will prosecute you. Now, SSC is also wanting to disclose GP which is embedded into this turnover so as to get rid of the IT department. However, he is troubled by the fact that the moment he discloses a turnover, he can get away with the income tax department by paying only the GP out of that turnover. However, he has to discharge, let's say 18% slab, then he has to discharge 18% on a gross turnover basis towards his GST liability. Now, what would be the correct way of doing things? In my view, the correct way of doing things is that in view of the fact that there are unaccounted transactions, you will have to request the income tax department to ask you the questions that whether your books of accounts are reliable. You answer that my books are not reliable. You request the department that, sir, some appropriate profit can be added in my hand based on whatever material that you have found. Without naming any undisclosed turnover, you can straight away disclose the underlying amount. Let's say 100 crore worth of turnover is found out and GP is 5%, 5 crore disclosure. What you can do is you can disclose the amount of rupees 5 crore as your hidden profit for the year under consideration and ready to pay taxes, etc. on that. And you can ask the income tax department to record your statement like that. Department is concerned only with the disclosure. They are concerned with the amount of money which is coming into the government treasury. In what manner you make a disclosure is always left to you. And therefore left to you, you can always make a disclosure that, sir, my undisclosed income for the year is 5 crore rupees, nothing more, nothing less. It is only the amount which is going to be disclosed and not the underlying turnover, GP rate, how you have derived the GP rate, how the turnover is computed based on the seized material. Nothing of that sort is required. If at all such questions are asked, you say that, sir, I do not know, I deny having entered into any of these transactions. However, I am ready to disclose a sum of rupees 5 crore as my hidden income for any such revenue leakages which you might have found during the course of the search proceedings. So you do not disclose the turnover, nonetheless you pay the taxes on the hidden income without inviting the problem insofar as income tax and GST read together are concerned. Now, problems which are induced because of GST action. GST search, material, etc. is found out, and ultimately your ITC is disallowed on the ground that your supplier is bogus or supplier is bogus. However, that by itself would not lead to a conclusion that your purchases are bogus. Assuming that income tax authority issues a show cause, that sir, you have yourself accepted that your suppliers are bogus, you have surrendered this ITC, you have paid into the government treasury, that is amount of that ITC, then why not disallow such purchases insofar as income tax proceedings are concerned? That is where you can raise the argument as regards the income being on tax, and therefore couple of arguments that A, if my sales is there, corresponding sales is there, you might say that sir, only the difference can be added. B, you estimate some reasonable disallowance on the ground that these are all grey market transactions and therefore there is amount which I would have earned by not paying the indirect taxes. Or you might request the authorities that sir, you reject my books of accounts, estimate my GPNP based on past transactions, and that way you can take care of all these alleged bogus purchases. The third situation is that in the income tax assessment, nowadays we see a lot of cases where the entire sales or part of the sales is treated as accommodation entries. And therefore, the view of the assessing authority is under the Income Tax Act that these are not the sales transactions, these are credit transactions, and therefore 68 provisions are invoked for the purpose of adding the entire sales as unexplained cash credit. Now, in this view of the matter, now in the hands of your purchaser, now you become a seller. Your sales is doubted by the income tax department. GST department now wants to take action against your purchasers, persons who have purchased from you, on the ground that because your sales is now held to be bogus by the income tax department, we want to take necessary action in your hand. In the hands of that particular supplier, he can plead that circular number 171 says that there is no question of any tax liability insofar as that supplier is concerned, because their department cannot demand, after having accepted that these are paper transactions, there is no question of demanding the tax or interest thereon. All they can demand is penalty under section 122, that is explained in example number 3 of circular 171, and therefore even that's your purchaser would be in a position to take appropriate defenses. With this, friends, I am through. I'm sorry I only exceeded by 16 minutes, but that was because of, as the airline would say, that operational delay on earlier flight. That was because of the earlier delay. If at all any questions are there and if time permits, I can entertain them. Otherwise, you all can go and have sumptuous lunch. So, yes, sorry. Right. Pilots are given the credit, yes. Pilots are given the credit. And in fact, take any situation, even if supposing somebody has not paid a TDS discharge the TDS obligation, in your hand you receive the money, the person will face prosecution at the hands of income tax department, and that becomes the money which is recoverable from that person.
Hello.
Right. Right. Absolutely. Because otherwise, they say that you have not purchased any material from them. Because under section 37, it is you who is claiming that to be a purchase expenditure. Under the law, if you are claiming an expenditure, you have to substantiate that expenditure. So how are you going to substantiate your purchase expenditure? You have to... Invoice is now not sufficient. That is what the authorities say. Invoice anyone can give without even actually entering into the purchase transaction. You are claiming the expenditure, sir. It's elementary that when you claim an expenditure, you have to establish that expenditure.
Hello.
Yes.
Sir, in case of sale, I have sell something to other party, and that party is declared as bogus party.
You have sold it to that party.
Yes.
That party is now declared bogus.
Huh.
Yes.
So on that basis, assessing officer has sent a notice to us and claimed that this sales is bogus, and they have added back it to. So
Right, the very same situation which I have taken in the last example, then you have under the Income Tax Act, you have broadly two defenses. One is that you have already offered this income as sales.
Sales only.
Therefore, this has to be considered as a sales, assuming that that sales is now required to be disbelieved, to be treated as a bogus sales. Then you will have to rewrite your profit and loss account. There is going to be a huge loss because in absence of there being any sales, you are only claiming the profit, etc. So under the business head, you will have a huge profit. Whereas this amount would be added as section 68 addition, and under 68 now because of 115 BBE etc. 68 will have a ring fencing. So there is no set off which is permissible. So on one hand you will have a huge business loss, and on other hand you will have income under the cash credit. So you explain to the authority, sir, this is something which is completely illogical. If you have already sold the material, and in absence of there being any allegation against you that you are entering into paper transaction, you have to establish the actual physical movements of the goods so as to establish the sales. The same documents which we require for the purpose of establishing the purchases can again come to your rescue for establishing sales transaction.
So they have passed the order, like they have not decreased the sales. They have not regenerated our P&L or trading statements and directly addition into 115B.
I understand. So this is an excellent ground for your appeal. You have to prefer an appeal and plead this, that at least to that extent my business losses will go down, and then immediately next year because of these losses you can claim a set off. At least to the extent of 30% taxes you can save. The difference between 30 and 115 BBE, namely 77.5%, you are exposed. And that you have to fight so as to establish the genuineness of the sales. Look, hitherto prior to 2016, this controversy was a no controversy in the eye of law because both the rates were same. So ultimate effect, there are instances where sales was doubted. However, sales you reduce, income from other sources you increase. However, both were taxed at 30%. Therefore, we do not have the developed jurisprudence on that issue. Now, after 16, that has become material because both are now taxed separately, no intra-head set off. So that is the reason why we have yet to see some judgments wherein this aspect is discussed by the court. But you must file the appeal and challenge it and establish the quantum of sales.
Okay, thank you, sir.
That says no ITR, no input tax credit can be disallowed even if it is not paid by the supplier.
Right. Input under the old act, under the Excise Act, etc., there was no such provision that in absence of there being any payment, you can not claim or ITC cannot flow to you. In that context, Supreme Court earlier also took the view that, sir, once a person has already paid the amount in favor of the supplier, then it is the obligation of the supplier. You can't deny the tax credit in the hands of the person who has purchased the material. We have judgments, old judgments of the Supreme Court. However, 16(2)(c) under the GST Act has in a way defaced those judgments. Now the issue is whether this provision is constitutionally valid. Can it be said to be a valid piece of legislation? That is the challenge which is pending before the various courts. Friends, with this, I conclude. I thank you all for giving me a patient listening. Jai Hind.
Sir, Tushar sir, so far as you are on the dais, no one is going to mind those extra 16 or 20 minutes, that I'm for sure. So being a person like you, it's not for the first time you are on this dais at the Ahmedabad branch. So as always, it was a pleasure to listen to you and to be a part of your session. And as a person into GST, I must say there is a lot of learning, like regarding that payment under protest, the way you differentiated between accommodation billing, bogus billing, that third party billing. हमारे लिए तो सब कुछ ही bogus billing है, simple language में बोला जाए. So thank you for differentiating that. Another thing, the way of calculating the disallowance regarding that accommodation billing. And at the last, GST income tax are not different paths, they are parallel paths. So thank you so much, and I would conclude in a bit different way. In case you are following social media, you will get what I'm trying to say. Your session was so elegant, so beautiful, it was just a wow. Thank you so much.